Welcome to the Commercial Real Estate Show. Thanks for joining us to lead, learn, and laugh. I'm Michael Bull, your host to the world of commercial real estate. Well, today, we're looking into the world of crowdfunding. We'll talk with the CEOs of 3 companies about the new way that sponsors of real estate projects connect with investors. Please welcome my first guests, Adam Hooper and Roman Rosario. They're both co-founders of Real Crowd. Gentlemen, thanks for joining us today.
Thanks for having us.
Thanks, Michael.
Well, to get us started, there's some changes in the Job Act, and then you also look at technology and where it's gone. Tell us a little bit about the Job Act and how you guys got started with Real Crowd.
Sure. So the Jobs Act has created what we think is one of the biggest shifts in how people can access real estate for the first time in 80 years since it was put in place by the SEC. The general solicitations you could never do before. So I couldn't tell you this is the first time we've met. I couldn't tell you that I'm trying to raise money for a specific offering. September of last year, that all changed, and now you can tell the world through the internet, through radio, TV, through billboards, that you're raising money for specific opportunities. So that's a huge shift in how the word can spread basically about raising capital for private offerings.
Okay, and tell me a little bit about your platform and how it works for investors and sponsors of projects.
Sure. So what we're looking to do is basically create the spot for investors to access real estate and for real estate operators to have an efficient way to raise that capital. So our platform we've built, we've done deals from San Francisco to Washington, D.C. We've got investors from all around the country and even international that can all come to one place, view the opportunities, review the due diligence, make those investment decisions all through our website online, and then manage the performance of that portfolio over time through the website as well.
Okay, so I'm a sponsor. I've got great projects. I've been doing it a long time. Well, I don't want to change what I'm doing. You technology guys out in California. I mean, why should I change? What's it going to do for me?
Yeah, well, what we've done is we've actually, the time you're spending on fundraising and investor management, our technology has allowed you to reduce that time by a fraction of the time overall. So a lot of operators are spending 40, 50, 60% of their time on either fundraising or investor management, and because of the technology we've built, we brought that down to 10 or 15%.
Nice. And then also, I guess the cost, if you're spending less time, then there's cost involved too, right?
Yeah, and that's the biggest thing is where is your time best focused as a real estate operator? You're not getting paid to manage your investors or to raise that capital. You're getting paid to basically create that value and find those opportunities in the real estate. So as Roman said, if we can shrink that time from 40% of your day and your career basically chasing money and managing investors, if we can shrink that down to 5%, that's all that time you have now back on your plate that you can focus on finding those deals and creating that value for your investors.
Or going out to lunch and
or having a good time, yeah.
All right.
That's right.
So I'm a sponsor of a project. I've got a great project that I want to buy, and it's a value add. I got to spend a lot of money on it. I'm going to do an addition. I'm experienced in my sector. What's my next step? What do I do?
Sure. So we've got a fairly thorough vetting process that we run through for the operators on our website. So 10 years minimum principal level experience, $50 million of combined experience basically with your portfolio. We'll do background checks, so any litigations, bankruptcies, foreclosures.
You're not going to call my old girlfriends, are you?
It depends. Probably not, though. Probably not. And then we'll look at your track record. How many deals have you done? Where have they been? What's the performance been? And then from there, you'll provide an application. We'll go through. We'll basically take your offering material. So if you put together an offering memorandum that you would typically take to your investors, we essentially repurpose that, make it so that's digestible through a web experience. From there, we can get it out to our network of investors, your network of investors, do joint press, pretty much any means you can to get the word out. And then through the website, basically harness that interest, collect those commitments, and then manage the whole transaction process through there. Okay,
so you're doing some vetting of the sponsors, but you really can't guarantee these sponsors in their deals, right?
No,
no
it's
guarantees.
Yeah, no guarantees. Guarantees in real estate are hard to come by.
Yeah, but it's good that you're vetting them up front. Yeah. So let's say I'm an investor now, and I think it's a good time to invest in commercial real estate. The downturn's behind us. All the fundamentals are improving. There's been a real lack of new construction. I think it's a great time to invest. But I don't have $80 million or $8 million to invest. Maybe I have 100,000 or whatever that I want to invest, can I do that through your platform, and what's the process?
Absolutely. So it's, as we said, it's all online. Minimum investments have varied anywhere from 10 to 50,000. So the operator themselves will set that minimum investment, and that's one of the benefits, as you touched on. If you have $100,000, you don't necessarily want to put all your eggs in one basket. So now through this platform, again, we've done deals in San Francisco, DC, Colorado, Arizona, LA. You can build a diversified portfolio with that same amount of money for deals that you'd never have access to otherwise, instead of putting it in one deal that's maybe in your backyard.
Yeah. Okay, and tell us about a sample transaction that you guys have been involved in.
Yeah, sure. So one property that we were involved in was a retail property in Washington, D.C. This was exciting for us because of, A, it brought access to a product type commercial real estate to a lot of investors, but B, it brought certainty of closure to the operator as well. We got a call from the operator 2 days before it was supposed to close, saying that they needed, they had an investor that unfortunately had to back out, $200,000. So they reached out to us and we said, okay. And we sent out to the network, and within 12 minutes we had that allocation filled. So it certainly brings certainty of closure to operators. It's real exciting for us.
And was that, in that transaction, had they raised the initial capital through you, or just they came back for the 200?
Yeah, they'd raised a portion through both. So they'd raised a portion offline and then raised a portion through our website as well. In terms of kind of overall deal specifics, the reason we started this company is because there's huge inefficiencies in what we'll call middle market equity. So beneath where the institutions will play, but beyond where a lot of guys can syndicate effectively. So anywhere from 2 to 8 million of equity. So deal sizes have been anywhere from 10 to 20 million, typically in the actual transaction size.
Yeah, we've done, so we launched in August of last year, and we've done $110 million of transactions. Every single one of those transactions have been over $10 million, but under 20 in that range. So
okay, so if I'm an investor and I want to invest $50,000 or something, I can look at various property types, and how many offerings might there be, say, at the moment?
Right now we've got 4 live, and we've got a pipeline of many, many more that we're waiting to turn live.
Yeah.
Okay.
Yeah.
And do I have to be an accredited investor to invest through this program?
Absolutely, and that's one of the differentiators between crowdfunding per the Jobs Act and what we're doing, which is really taking traditional real estate syndication and making it hyper efficient. So we are dealing with accredited investors. Part of the Jobs Act, when you make a general solicitation, is we have to take some extra steps to certify that you're accredited. So typically self-certification, check the box. When you do a private placement, that doesn't cut it anymore. So we have to take a few extra steps to take what the SEC calls reasonable steps to verify that the investors are accredited.
Okay, and for our listeners who might just be driving down the road and they tuned in on the radio, what is an accredited investor?
Yeah, accredited is 200,000 or 300,000 of annual income, whether you file single or joint, or net worth of $1 million or greater, not including your personal residence.
Okay, yeah, they took that out, right?
Yeah, yeah.
Because who knows what it's worth? It's going up and down so fast. Who knows?
Especially during the last cycle.
Right.
Yeah.
Well, what are some of the challenges that folks have when they're trying to raise capital like this and are maybe going through this process?
Sure. So challenges in overall capital raising are just inefficiencies. Everybody has their network of 100 or 200 or maybe 300 or 400 investors that they go out to, and at some point you become a victim of your own success. You can only go back to the well so many times. So from the challenge standpoint of raising the capital, we alleviate that by now having a network of literally thousands that you can access through this way. For the industry in total, adverse selection has been a concern that a lot of people have had with crowdfunding. Is it going to be basically a funding source of last resort, rather? And what we're doing by providing the tools to manage your existing portfolio of assets, we're providing a lot of extra value beyond just the capital for the operators, and so that's how we're able to attract the best operators. And we feel the best operators are going to do the best deals.
Right.
Yeah, well, that's a good point. And what about the exit strategy? So for these investors who are typically, as you mentioned, maybe investing small amounts of money in a larger project, you guys aren't really involved in the exit strategy, right? How does that work?
Yeah, it works like a typical syndication. So the investors, when they come to our platform, they're educated that these are generally illiquid opportunities that have a timeline associated with it. So 3 to 5 years in many cases. And so the investors understand that their money is going to be invested through that period of time.
Yeah, and the operators, they're the experts, right? We're not an expert in every product type in every market across the country, but we know how to find the guys that are. And so by partnering with them, they're in the position to make those decisions and be the stewards of that capital for the investors.
And we're short on the break. Well, we're at the break. Well, the timing is good, and I appreciate you guys being on the show today. Thanks for joining us.
Thanks for having us.
Thanks, Michael.
If you'd like more information from, go to realcrowd.com. I think you'll be impressed with what you see. I'm Michael Bull. This is the Commercial Real Estate Show. Stay with us. We have a lot more for you. The Commercial Real Estate Show is brought to you by Atlanta Office Liquidators, new and used furniture liquidators, France Media, publications and conferences, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.